economist, former minister. Good morning and welcome, sir.
Good morning.
All right, now we're going to try again, and let me hear you through the earpiece, guys, if not. All right, so
Good morning.
welcome. And
Good.
all right, so I'm hardly hearing you, but however, yes, thank you, guys. All right, so let's get into it. Obviously, a new government is installed. Just an overview as to we get into, after the election, into a new government installed. Obviously, yesterday, the Prime Minister spoke to the media for the first time. But just, are you breathing a sigh of relief that there's a new government installed?
No, I don't think that it makes a difference. Whether it was UNC or PNM, the problems remain the same.
Okay, all right. Let's get into it. All right, so we have a new Minister of Finance, and
Yes.
Mr. Tanku. Let's speak to his responsibility. First up, obviously, the reports from a financial standpoint, based on what was said yesterday by the Prime Minister, does not give a good outlook as to where our finances are presently. Just give us your overview as to what you heard from the Prime Minister yesterday.
Well, I don't think that this situation is surprising. I mean, I would be surprised if people were surprised. We've been in a difficult position since 2014. There's a reason why VAT refunds are not paid and haven't been paid, and it's about $7 billion. And the answer to that is we've never been receiving enough cash to meet the expenses. So if your revenue profile is depressed because we're not exporting enough by way of natural gas and or natural gas derivatives, then your revenue profile will shrink. And the economy has not been growing. I mean, we've only recently returned to a positive rate of growth. And that explains why we have run 16 years of deficits out of the last 17. So it's not surprising that we'd be in deficit. And
All right.
I can't see why anybody would be surprised over that.
All right, so the Prime Minister would have mandated on her inaugural speech, basically, the new Minister of Energy, Mr. Dr. Rudinal Man. Mr.
Munila.
There you go.
Yeah.
Rudinal Man. It's coming. Anyway, Minister of Energy, Rudinal Mudilal. All right. To explore CARICOM natural gas or oil and gas in Grenada, Guyana, and another part of the Caribbean there. Let's speak to the Caribbean or CARICOM being explored from a natural gas standpoint. The benefits that can be derived thereof, if there is that a wise investment to make at this time, as far as you're concerned?
I don't know if it's an investment at all. The issue is very straightforward. We know where the hydrocarbon deposits are on the basis of exploration. Guyana has been the most exciting market internationally because they've had several successful new finds, both oil and gas. So it would be natural for us to consider developing a relationship with Guyana and Suriname. I have no doubt that those conversations were had before. Now, the difficulty is that the gas and oil is in Guyana and Suriname, and we're in Trinidad. What we want is to move the gas and oil from Guyana and Suriname to Trinidad. Right? And I don't think that that's as easy as everybody would like to make out. Now, all you have to do, and I think what people have to pay attention to, is to look at the maritime boundaries of Venezuela. Trinidad and Tobago exists off the coast of Venezuela, and all maritime boundaries are literally something of a contrivance. We have the boundaries to the east going outwards, and a narrow range around the areas which we share in common. We are 7 miles away. So when you look at Venezuela's boundaries, Venezuela's the territorial extent is about 200 miles outside. That's the economic exclusion zone. I know anytime that you have to get gas or oil from Guyana or Suriname to Trinidad, you have to pass through that route. Otherwise, you have to go all the way out. And I'm talking about laying a pipeline. The shortest distance between 2 points makes it 250 kilometers. Now, if I'm not mistaken, and you could correct me if I'm wrong, but isn't Guyana and Venezuela in a border dispute? I think they are. and Venezuela is claiming approximately 50% of Guyana. Now, anytime you're dealing with that and you're talking about running a pipeline, you have to get Guyana to agree with Venezuela about routing that pipeline through Venezuela waters. And if there have been rumblings between Venezuela and Guyana, that is unlikely to happen. So I don't think that it's so easy. It might be easy to say, but I think in practice it's very hard to do. And the second part of that problem, the second part of that equation, is the OFAC license problem. Right? That if you have to run any pipeline through Venezuela waters, by definition, you have to make some sort of monetary arrangement with Guyana. Sorry, with Venezuela. And if you have to make some monetary arrangement with Venezuela and you're talking about payment in US dollars, you immediately run up against the OFAC license problem, which is what we found with Dragon. So that's problem number two. All right. The third problem, right, is the technical issue of running that pipeline. Well, how are you getting around those two other problems? You know, those are not. I mean, it's easy to say, it's very hard to do. And the fourth issue is that notwithstanding anything, any arrangements that may be made between the sovereign state of Trinidad and Tobago and Guyana, fellow CARICOM state, the difficulty is that the licenses that have been granted to Exxon literally give Exxon the right to export that oil to the destinations of its choice. Now, you are told Guyana doesn't have exploration capacity. Guyana doesn't, I mean, it might own the oil technically by way of giving a license, but once you've given the license, right, Exxon is in control of that oil. And the intention of Exxon has always been to export the oil as much as possible, as far as possible, to meet its external requirements in the US. So none of it is not going through onto Guyanese territory, or for that matter, to be exported to Trinidad and Tobago. Now, presumably, these arrangements can be renegotiated, but that takes time. So this is not a simple exercise that is going to be done in the course of the next 5 years. And I know it's important to give the country some level of hope in terms of what is possible. But the sooner we begin to think of the alternatives to energy and how we have to dynamize the country, the better for Trinidad and Tobago. I'm not saying don't do or attempt to do those deals. The reality is that those deals are going to take a long time to come to fruition.
Good. All right. Well, let's go now to the newly installed, newly minted Mr. Maharaj, who is Minister of Trade, Investment and Investment. Obviously, his experience as the owner of Sasha Cosmetics brings some confidence in what he can bring to the table. Obviously, his first objective, as you mentioned there, is alternative to oil and natural gas. And he's saying we can diversify the economy. Tourism being one of those that we have always spoken about, but never really focused on. How can we, and do you have the confidence that Mr. Maharaj can bring some leverage in terms of how we maximize our tourism brand?
Business is business. And if he's been a successful businessman, then by definition, he will have a different approach to managing the Ministry of Trade and certainly managing the potential for diversification in the market. Right? But I must make the point that this is a long-term exercise. This is not something that's going to happen overnight. Now, with respect to tourism, the difficulty is that Trinidad and Tobago does not have enough tourism product of any kind to basically make it a fully viable sector on its own. That's the point. That's a key point. We probably have about 1,400, if so much, 3-star hotel rooms and above. 1,300. That's you can't. I mean, for a market to be survivable, you have to talk about 5,000 to 6,000. So the first thing you have to talk about is the type of investment that is going to be required to expand that. The second part of that question is that who is going to be doing the expansion and the structure of that underlying sector for it to take place. Now, is it going to be the Trinidad and Tobago, Trinidadians or Tobagonians, for that matter, are going to be the investors and building out the actual physical plant to be able to do it. And the second part about that is the businesses don't become viable as soon as you open them. There's a long lead time towards developing the physical plant, setting up all the other arrangements before you accept your first guest. Right. So the issue is there's a long gestation period for this to happen. And the model, the tourism model that is built also has to be calibrated to ensure there's a high domestic input. If you want to have diversification in the real sense, that's going to facilitate the economic growth of Trinidad and Tobago.
Manufacturing has been one of those areas that the previous government spoke about as an option as diversifying to more or beef up production in manufacturing. Bring that into perspective.
Well, we have and have had some comparative advantage in a few areas. All right, that's where confectionaries and snacks comes in. Right? But the reality is that we are importing to export. We don't produce those inputs ourselves, which is not a bad thing. Japan, for example, doesn't have any raw material requirements in its own, its own recognizance. It imports 95% of the raw material that it uses to manufacture, but it does have certain types of conversion competencies, which allows it to take raw material, iron ore, and convert it into literally almost everything, right? Which is really where, and you have to have a strong technical background in terms of science and technology. So it's not just simply saying that we're going to start manufacturing. Right? If you look at, let's take the energy sector, or let's just take steel as two examples. We bought the best technology with regard to steel in the 80s, partly on newfound oil wealth, and we set up the Iron and Steel Company. And what did we run into? We ran into countervailing duties from the North American market, which effectively said that we were subsidizing the export of steel and it was damaging North America's interest. And they put countervailing duties on us, which basically literally mashed up the company. We had to basically get out of the business and sell it over to ArcelorMittal on a private basis. Well, what happened with that? ArcelorMittal basically did as much as he could, made as much money as he could, eventually went on to become the largest steel magnate in the world. And after he had used up our resources, basically left the plant high and dry and went about his business. Right? The answer to that is that it wasn't a Trinidadian running the plant. It was somebody else. And the answer was to maximize your profit at Trinidad and Tobago's expense. He left the liabilities behind in Trinidad and Tobago. So the issue isn't just simply the sector. The issue is how you are going to configure the sector. The same is true in terms of petrochemicals. They are largely foreign companies run by Trinidadians, but the capital is owned by foreigners. And by definition, you accrue income to the foreigners and dividends which are paid to the foreigners. Right? So you need to have a blend of domestic capital and foreign capital if you want to retain the benefits of manufacturing or the benefits of any type of company, for that matter.
One of the challenges I think that one of the areas that we're not necessarily focusing on is inviting investors or inviting foreign investment. All right, so we could go to St. Martin, and you go to St. Martin, downtown St. Martin, and you see Hard Rock Cafe, and you see all the American investors or investment. You walk in their free zone, and they're all foreigners that are there applying their trade in a busy tourism hub, which is St. Martin. You could go to other parts of the Caribbean, and the same exists. My question is, how do we invite those types of, I don't want to say, brands into your country, whether you give them a 10-year lease, a 4-year lease, a 5-year lease, a 100-year lease of the land so as to occupy and to establish business. What would that type of foreign investment bring to an economy? Should we allow those chains of businesses to be part of how you exist in your community?
Well, I don't think the issue is inviting chains per se. I mean, for example, Starbucks is in Trinidad and Tobago. It's not owned by Starbucks International. It's owned by Trinidad and Tobago company. It's a franchise. So it's not the label. It's the ownership structure that is behind it all. And then the same token, you have to remember, and one has to take into consideration, Trinidad and Tobago's energy sector in large part, has been done by foreign direct investment. So it's not to say that we are any stranger to foreign direct investment. We are not. And we've been long opening our doors to foreign direct investment. So that's not strange. The issue is the prioritizations and the structures that support those things. Right now, much of the foreign direct investment that came into Trinidad and Tobago came with regard to the energy sector. Money will go wherever it has an opportunity to increase its yield. And the bigger the yield, the more capital that will come. We haven't been having large foreign direct investment because most of the foreign direct investment that came into Trinidad and Tobago was centered around the energy sector. Right. Now we're talking about developing other areas. Now, the example of confectionaries and snacks is an example of domestic growth using domestic capital and which has expanded outwards. And nationals have been in charge of that. Those companies are doing very well. And those companies are run or have people who have become millionaires and probably billionaires, right? So it's not only foreign direct investment, it is how you encourage your domestic participation in those markets. How do you help them to grow?
All right. Would Petrotrin be a fine example of how do you see we rolling that out? Given what you just spoke to, the locals having their, if you want to call it, slice of the pie, as it were. And let's go to Petrotrin. Given that the government is intending to reopen Petrotrin, the advice from the last regime is that it was losing money. What is required in that instance? Obviously, is something that we need to have as from a local standpoint, where as the union is concerned, they're going to run it and maybe have the foreign investment aspect of it. You just break it down for us and to give us how this will work.
There are three things that we need to look at. In the first instance, you're thinking of the refinery as a standalone business. Refining as a standalone business is a thin margin business. They make money by the cent, which means that you have to manage your costs. And the plant has to be very efficient. North American plants, for example, operate at the upper percentile, somewhere between 95% to 98% efficiency. Right now, that's a very important number. Whereas Petrotrin, at its best practice in its last years, wasn't going above 75%. Now, that means that to compete against a 98% efficiency company, you have to do some huge improvements to the infrastructure of the company, of Petrotrin, for it to be able to compete at that level. That's point one. Point two is not every business makes money all the time. And sometimes certain ends of the business will make more money than others. That's one of the reasons why energy sector companies are what is called vertically integrated companies. In other words, they have a trading arm, they have a refining arm, they have an exploration arm. At some stages, one of those areas are going to be able to make more money than the others. But the point is that it's a flow of resources that is running through the company through a mechanism that allows it to be successful. Right? So it's not looking at the refinery by itself, because you have to get oil. Oil has to come from somewhere. Right? So how you purchase your oil, how much oil you get, the blends that you get, that basically is what's going to help drive the refinery. And then the refinery also has to be operating at a certain level of efficiency. You have to have technical competencies. You also have to be able to transport it from point A to point B, right? So there's also a transportation element, and there's a marketing element, etc., etc., etc. That's why it's a vertically integrated company. So to look at Petrotrin only from the point of view of refining, right, puts us in a segment of the market where you are subject to the same variances that you would have anywhere else. And it means that for it to operate, it has to operate at a high level of efficiency. A high level of efficiency means a huge amount of investment. That plant has not been operating for 7 years, at least 7 years. Right? So how was it mothballed? I mean, if you park up a car for a year and you go back, you can't just turn on the ignition and expect the car to start.
All right.
And if it does, right, you're gonna find as you drive down the road, something start to leak, this start to go. Well, you can't do that with a refinery. It will blow up.
Yeah.
right? So there's a huge amount of investment that is required to make that work. The government clearly doesn't have the money for that to happen. So somebody else has to do it.
So isn't this a perfect opportunity for foreign investment? You just outlined all that is required for that to run efficiently.
Of course.
And so isn't this a perfect opportunity to invite maybe some refining company individuals across the world to be part of this process to restart this industry? Isn't it a perfect opportunity for foreign investment?
Well, if it was so easy, why hasn't it happened?
It's not so easy.
Well, that's the point. It's
Yeah.
not easy, right? You have, first of all, you have to give it to me, right? I am not going, you want me to come in, so I'm going to extract the maximum terms that I can, right? And those terms may not be palatable. We're not in the back office. We don't know what is being offered, right? The second part of that is that after having terms, there's some what is called some liabilities I'm going to leave behind. I am not Petrotrin has been in the same position for how long? 100 years? 75 years? The moral of the story is that there's some issues with regard to environmental degradation. Who is going to be responsible for that? I am the new investor coming. I'm not taking that responsibility. That's for the state. The state has to take on all of that, right? So it's not an investment that doesn't have costs, right? Because if we haven't managed the environment properly, there are going to be residuals, and the residuals have to be dealt with, and you have to find a budgetary expenditure to be able to clean it up. No new investor is going to take that on, and you have to hold them safe from harm in that regard. The state has to accept that responsibility. All these are negotiating things which are not simple to get over.
All right. I noticed, I don't know, the government, well, given yesterday, I don't know, I did not get all of what the Prime Minister said. However, the issue of Forex is still with us. It's still a problem in this country, or lack of it. We have not heard of any, well, should we have Petrotrin up and running, and given all that you said, and we gotten over all those problems, and whatever other investments that we can make to earn Forex, but what would be the low-hanging fruit for us to, as we go forward, in terms of treating with that Forex issue?
There are no low-hanging fruit. There are no low-hanging fruit. And that is a reality that the country will soon have to face, and the government will have to put on the table. Right? Yesterday, the commercial banks, or at least one commercial bank, indicated that it was cutting the limit that it initially maintained a limit of $5,000 on credit cards. Now it was cutting the limits on credit cards, new credit cards, to $500, and that any new credit card that was being done would not get a limit beyond $500. Well, I don't think there's any sharper message to tell you that the foreign exchange situation hasn't got better; it's gotten worse, and will continue to get worse. And the 10% tariffs, for example, do have an implication for Trinidad and Tobago, as much as the Ministry of Trade has attempting to step around that. We are the largest exporter of ammonium in the world. Ammonia, largest exporter. And we have a long history of the export of ammonia. And ammonia is important by way of fertilizer, because it's what helps feed the world. But guess what? That's subject to the 10% tariff, as is methanol, as is melamine, as is any potential export of iron and steel. So that has implications for Trinidad and Tobago's ability to earn more foreign exchange moving forward. This is not a simple time. And to suggest to think that because we have a new government that the foreign exchange problem is going away, quite the opposite. It's not going anywhere. It's there. This government inherits all the problems of the previous government, and the country is not going to disappear overnight because a new country has come in. And the options are narrow. They're very narrow. Either one, you restrict access to foreign exchange, which is what the banks are doing, or alternatively, right, you have to let a market mechanism operate, and the answer to that is devaluation, right? Not and you can allow the market to depreciate, but once you have a fixed peg, you've created an issue that literally requires an adjustment at government level, right? Why because the other we have not been allowing the market mechanism to work. Well, we boxed ourselves in.
All right. No, my next question, and I heard you mention it vaguely there, the whole question of devaluing the TT dollar. Obviously, the last government, or the PNM government, were very adamant that we cannot go down the road of devaluation. Does this government have a choice in maybe, I don't know, tell me, are we looking at a possibility of a devaluation, given what you just outlined?
No, as long as you have a dollar peg and you're floating at a fixed dollar rate, there are two options. Barbados is a good example of how that operates. Right? When the economy is tight, the government cuts its fiscal position and cuts the size of the public service and reduces its expenditure. It does not adjust the price of its dollar, but it makes the necessary fiscal adjustments for that to happen. They tighten their belts. Now, that's not something that we've been prepared to accept politically. Quite the opposite. Everything that was said on the campaign trail is about what government is going to do positively and pay more. Now, that's the antithesis of running a fixed dollar peg. You can't do the two things. You can't. Right? It's economically impossible to do them. So at some stage of the game, you have to reduce demand and run into a period of austerity. So that's what Barbados does. And Barbados is the closest example to what you want in a fixed dollar peg. The alternative to that is, of course, inflation, right? If you were to do a devaluation. Now, if you were to allow the dollar to float and to allow it to move naturally, and there's a natural depreciation, then people get accustomed to it over time. But if you don't do it, the longer you wait, the bigger the adjustment process. Right? That's the difficulty in which any government will find itself at this stage of the game. And there's a second point to that. Here's the point. As long as you're pegged to the US dollar, whatever is happening to the US dollar is happening to you. And the one thing we know with regard to Mr. Trump's tariffs is that the US dollar has been depreciating relative to other countries. So whether you like it or not, the value of your dollar is depreciating on a daily basis. Right? As long as US dollar depreciates, it means it will cost you more Canadian dollars, or it will cost you more sterling, or it will cost you more yen, or it will cost you more X. Right? As long as you're tied to currency. So whether you accept it expressly or you do it, it happens, how shall we call it, where you're not seeing it. But that's where Trinidad and Tobago is. It's not a simple position at all. Right? The government has a very difficult problems on its hands. It's on a tiger. If you are going to, and you have promised to expand your expenses, you promise that you're going to pay more money. Well, if you don't have the cash flow, as the Prime Minister said yesterday, well, what are you going to do? Are you going to tax more? Right? Are you going to printing more dollars doesn't help, because all that does is make the rate of inflation go up. So that isn't helpful either.
All right. So, yeah. So you mentioned the promises, right, guys? Thank you. Yeah, the promises that was made on the campaign trail. One of them, the 10% to public servants. If that is, and of course, based on what we're hearing, that's a large drawdown. Obviously, that's going to affect the overall economy. Is it possible? Is it realistic to pay that 10% to public servants?
Why? I don't see from a political perspective how they're going to avoid it. If there's one promise they're going to keep, it's that one. Right? You have labor in government. What you're going to tell the people you brought in the government for them to go and tell the people that I promise you X, Y, Z, and that's not going to happen? No, they're going to pay the 10%. What that means is that we're going to have a bigger deficit. If as was reported yesterday, there's a cash flow deficit, right? Then by definition, that deficit is going to become larger. Right? So what are you going to do to cut government expenditure, or alternatively find more revenue? Well, let's understand it. Governments tax people's incomes, and the only way that you can raise government revenue is to tax more. The alternative is to get the economy to grow. Now, to get the economy to grow, and to grow at the rate that you're looking at, Trinidad and Tobago is growing at the rate of 1.5%. What you want to get the economy to do is grow at 8%. Now that means that you have to have massive injections of capital, and massive injection of capital that has an economic a positive economic potential. And nobody invests money to lose money. They invest money to make money. So what are those areas that are going to happen? And are they going to happen overnight? The answer to that is no, it's not. So it's going to take time. Right? And you have to manage, this, you have to manage that period.
Media review, obviously she spoke about that. Obviously they're still looking at what is in the Treasury as to how to roll out the plans going forward. Do you expect any, well, given the deficit that we are in, there are no surprises really, except whatever back pay, as for example, that's whole 10% and so on. Can we look for any packages, nice packages for workers who can fall in that enjoyment of whatever they can offer during this media review? Or do we just have to ban or tighten our belts because there's, based on what they're saying, there's nothing there?
Yeah, well, the workers will get the 10% increase. The 10% increase is going to make your foreign exchange position worse, right? Because you're going to increase disposable income. When you go out and spend the money, what you're going to buy? 90% of what we buy every day is imported, right? So once you do that, right, you increase the pressure on the foreign exchange reserves immediately. So I'm sure that they're going to run a bigger deficit this year, if only because we're going to pay the 10%. But at the same token, understand that it's not going to solve the issue. In some instances, it's going to make it worse. And that's where we are.
Okay. All right, Mr. Browne, we want to thank you for being with us this morning. And of course, I wish you all the best. And we'll chat again. Thank you, sir.